Hello there, good to have you back on Your Trades. Let's keep the discussion going with Rajesh Pavia and Mr. Ajay Bagga as well. Mr. Bagga, my question to you now is, if you take a look at the sectoral gainers on a weekly basis, you have IT and FMCG right at the top. So do you think it's time that these defensives came into play? It's about time that we've seen these moves on both of these defensive counters, and do you think defensive is the way to go ahead now?
I think three trends are coming out very clearly. One is the global impact of the Fed rate cut, and ECB is already easing. Bank of Japan is in a catch-up mode. China is easing. So overall, the world is easing interest rates. What does that mean? That the banks are anticipating a slowdown globally. In that kind of a scenario, you normally go into defensives and you go into domestics. So I would say first counters, the first sector one can look at is financials. Here again, the wholesale funded companies will get the bigger push as the RBI also goes into rate cuts. Our thesis is that the RBI will cut about 75 to 100 basis points in the next 12 to 14 months. So we are seeing rate cuts following up in India as well, because the economy is being restrained by real rates being quite high. So that's one. Second big thing that's coming through is the rural economy and the rural demand picking up after 4 years of very sluggish performance. So expectation is, as the festive season has started with the Ganpati festival, we are expecting rural demand to pick up, and as the harvest comes in next month, we will get clearer signals. But the FMCG players, the two-wheelers, the tractor players are already signaling this coming back. So rural demand is the second part. And third will be the sheer domestics like auto, like banks, and real estate. I think these will do well. Telecom is a repricing game. Tariffs are being increased, so telecom, you will see repricing happening there. And pharma and IT in terms of the defensives. I think within that, pharma is looking more attractive. IT has run up a lot and valuations are strong. Given it's a presidential year, a presidential election year in the US, you might have a little slowdown in new order flow, and which could pick up from next February onwards. So in that scenario, pharma might do better for the next 6 months than IT.
Okay, so pharma versus IT, and pharma taking the clear run up ahead for Mr. Bagga. But Rajesh,
if you like this video, then like, share and subscribe to ET Now.